Samvat 2081 may have been a muted year for markets. But as we step into Samvat 2082, investors are hoping for brighter fireworks. Across the street, experts agree the coming year is all about careful stock selection, diversification and capturing stock-specific opportunities. So which themes and stocks could really light up your portfolio in the coming year? Let's dive in. Despite global headwinds, India's domestic story is resilient. Across our conversations with 5 top brokerages, a few key themes stood out. Financials and consumptions are expected to benefit from earnings recovery and supportive policies. Manufacturing, infrastructure and defence could see strong growth on government spending and capex momentum. Mid-caps and selective stock plays may deliver outsized returns. In short, Samvat 2082 is shaping up as a year where stock-specific opportunities matter more than index-level moves. In fact, across brokerages, analysts are highlighting a mix of high growth, consumption-led and domestic champions. Stocks, they believe, could deliver festive season fireworks for investors. Let's take a closer look at their top picks. HDFC Securities calls its picks rockets ready to take off. Among their picks are the likes of MSTC, the digital auction powerhouse, trading at 13 times forward earnings. The target price outlined is at 673 rupees. Northern Arc, a diversified NBFC benefiting from liquidity and rate cuts. The target here is at 333 rupees a share. Sheela Foam, a turnaround mattress play, riding rising consumption. Well, as we ring in the new Samvat with Diwali, investors are looking to reset their portfolios after what's been a challenging year for equities. From sector rotation to gold allocation, experts tell us where to put your money for steady wealth creation in a changing global landscape. Over the last year, Indian markets have lagged global peers. The Nifty remained flat compared to 14% rise in the S&P 500, hit by factors like US tariffs, foreign outflows, weak earnings and stretched valuation. But India's resilient growth momentum and several policy tailwinds, including rate cuts, better liquidity, higher government capex and the recent GST 2.0 reforms position the economy at a key inflection point. Experts also say double-digit FY27 earnings could power strong market returns, especially in the mid and small cap segment. But markets will, of course, be keeping an eye out for the earnings growth trajectory and the US trade negotiations very, very closely. So what's the outlook looking like? Can we expect some fireworks in the year ahead? And which are the top 3 investment ideas to bet on this Samvat? Joining me now to decode what Samvat 2082 could hold and share his top stock picks for the festive season is Devarsh Vakil, Head of Prime Research at HDFC Securities. Devarsh, lovely chatting with you. First of all, wishing you and your entire team a very, very happy Diwali.
Happy Diwali to you, to your family and all our viewers. Nutan Varsh Abhinandan. I wish that the struggles which we had last year will be behind us and we are looking at a prosperous new year ahead for the country as a whole and for investor portfolios.
Absolutely. We are all looking forward to a better Samvat 2082 because we know Samvat 2081 hasn't really given, blockbuster returns when it comes to the markets. But going forward, first of all, how are you looking at Samvat 2082? We have had quite a few domestic tailwinds, as I mentioned at the start, GST, rate cuts, growth has been strong, inflation under control, good monsoons. Earnings also, most of the experts believe have bottomed out and we could see good recovery in the coming year. What are your thoughts? Do you expect more fireworks in Samvat 2082? And as a house, HDFC Securities, do you have any nifty target in mind by next Diwali?
Right. So let's first talk about the challenges. See, the US-China trade war, that has actually entered a phase of sharp escalation and a little bit of uncertainty has increased there. So that is the challenge at the beginning of this new summer. We expect that there could be a lot of friendshoring, a lot of people, all these two countries will try to diversify their supply chain and that will also create disruptions in the global trade. So that is the near-term challenge. I think as the year passes out, that will resolve itself. The reasons which we had challenging Samvat 2020-81 was because of a lot of geopolitical concerns, the FIs selling aggressively in Indian markets because of the relative overvaluations. And I think those challenges are getting resolved there. We saw some peace coming back to the Gaza-Israel issue. We are now seeing lesser FI selling, and we are expecting that the RBI putting a floor on the rupee, there could be some more buying from FIs going forward. So it makes us chirpy about the next year. And as you pointed out, the income tax cut, GST cut, the RBI providing liquidity, and the interest rate cut coupled with the good monsoon. So that makes us bullish on the next summer. We feel that the stock specific opportunities are there where we will see good earnings growth, and obviously prices are slave to earnings. So as the earnings move up, we expect the prices to go higher. We haven't issued the new Nifty target. We usually do it at the end of the year, but we are looking at
Okay.
26,400 as a target for the full calendar year next year.
All right, got your point. But before we break down individual stock recommendations or picks or dhamakedar stocks from HDFC Securities, what according to you would be the overarching theme in summer 2082? Of course, there has been a lot of interest and renewed buying interest when it comes to consumption. How, according to you, should one look at portfolios? What should be the divide when it comes to consumption and capex? And any other up and coming themes that should definitely be a part of your portfolio in the new year?
Right. So we have a predilection towards the financials and the domestic consumption sectors. So that's where we have tried to pick more stocks. But we also feel that as the capacity utilization are nearing 75-80%, there will be private capex starting. So especially on the engineering and the power side, we also like a couple of stocks. So what we have tried to do is try to pick as a part of this month picks around 10 stocks, couple of them from the financial sectors, and another three, four stocks are from the consumption side. As we discussed, that we expect the domestic consumption theme to play out this summer, and apart from that, couple of stocks from the power and capex area. So we try to bring
Got
out
your
a
point.
balanced portfolio in this summer.
Sure. Okay, let's break it down to individual names then. I'm just going through your list. I think I would like you only to reveal your first stock recommendations and why it really stands out as a pick this Diwali.
Right. So as our show's name is Dhamakedar, so we have issued 10 stocks, but let's discuss three which are likely to be high beta Dhamakedar stocks. So the smaller stocks where there are some inflection points, let's discuss them. So one of them is the MSTC. MSTC, as we know, is the Government of India, central government e-auction and an e-platform company. So it's a IT company, high-tech company, but obviously from the PSU stable. They have various e-auction and e-commerce platform where they do a lot of business for coal auction, new digital products for like Upkaran portal, where government is trying to bring out equipment leasing into country. These businesses are run by this company. So the EPR policy implementation, the vehicle scrapping business is also one of their joint venture with Mahindra, where we see there is going to be a lot of capex. They are doing disciplined capex, trying to build some data center expansion business. So all this makes us bullish about this company, that there are growth prospects here. And compared to the valuation in other technology-oriented stocks, these stocks, MSTC is available at quite attractively, and that's why we have chosen MSTC as one of the picks this year.
Sure. Okay, it has valuation comfort as well. But of course, it has an asset light model and, as you mentioned, steady earnings visibility. How do you see margins and growth sustaining over the next couple of years for MSTC?
So we do expect it to deliver good growth. Our Earnings expectations are from 27 rupees in FY27. We expect it to go to about 40 rupees. So about 14%, 12%, and 20% growth in revenue, EBITDA, and PAT over the next 2 years. Around that is our expectation. So compared to such a steady growth of 20%, it is available only at 13 times forward earnings. So compared to the growth, it is available at a very good valuation. So growth at a reasonable price is the theme where we have picked MSTC as one of the stocks.
All right. Okay. About your second recommendation, then, take us through which stock it is and what's the rationale.
Sure. So second stock is in the alphabetical order. So we discussed M on MSTC. So let's discuss Northern Arc, which is diversified retail credit platform. So they basically is an NBFC, but also do fund management and placement and lending for other NBFCs. And they, compared to other parts of the world, we still have a long way to go for the lending business to grow. So that's why we have chosen NBFC. It is basically a multi-channel offering for the NBFCs in the lending space, in the private placement fund management space, and they have a lot of proprietary technologies. So using this technology, they have been able to grow their business quite rapidly. They have a very conservative credit policy, so they write off any assets which are NPA for 90 days, and that's why their gross NPA and net NPA figures are very low. And management has highlighted that because of the macro headwinds and RBI's rate cut and the liquidity, they are expecting a very good growth in the second half of the FY26. So that's why we have chosen it. It is available at around 1.2 times adjusted book value next year, and which is quite attractive. And that's why we have recommended this stock.
Sure. Of course, with RBI rate cuts and a good monsoon expected to support lending in the second half, as you mentioned, what's the upside you see in terms of profitability and fee income for Northern Arc?
Right. So Northern Arc, as I mentioned, they are doing about 300 crore kind of PAT this year. And we expect, our analysts expect that the profits are going to rise to 580 crore by FY27. The top line, the net interest income, which is around hovering around 1350 crore, should likely to go to about 1800 crore in next 2 years. So robust growth is expected with a very attractive valuation. If I value the company at 2 years down FY27, it is easily available at a very attractive one-time price to book value. So that gives us confidence that this stock is likely to give us a good opportunity. It is trading around 270-80 band. Our target for the next Samvat is 333 till next Diwali.
Okay, that's the view, the target of 333 for next Diwali. Let's talk about the other recommendation as well. I believe it's a stock called Sheela Foam. Tell us what is the kind of upside you expect here, and what makes you select this particular stock as your Diwali recommendation or the market stock, for, so to say.
Right. So Sheela Foam is the largest PU foam player into India. They have two famous brands. Sleepwell is their brand, which is the anchor in the core geography. 2021, they bought a brand called Kurlon, which is a very famous brand across India, and now expanding into northern and western India. And they have recently launched Tarang under the Sleepwell category, and Kurlon, they have issued a new brand called Aram, which is sub 10,000 category to capture to the growth which is happening into tier 2 and tier 3 towns across India. So it is basically a play on the consumption, as we see that these brands are going to help them outpace the industry growth, improve the margins, and the business mixes towards the higher margin businesses. See, the change in the lifestyle and the urbanization and the consumption play and the rising India's per capita income is changing the preferences towards these mattresses, and that's where this company, which was struggling for last couple of years post Kurlon acquisition, is likely to turn around. And as of the market, our stock where company moves from loss to profits, we think that this has a potential to give us the alpha to our portfolio, and that's why we have chosen this company. We are expecting it that the lower margin will eventually mean revert to the normal margins. That's where we are expecting good growth.
All right, that's the rationale for choosing a Sheela Foam. So you've given us three dhamakedar picks for Samvat 2082. You know, if I may take this opportunity to ask you, if you were to categorize all three stocks, all these three dhamakedar stocks as a firecracker, what comes to your mind for all three of them, if I may ask?
So what we have done is we have chosen the 10 stocks where some are large cap steady stocks like Pidilite or LLT. But the one which we have discussed, these three are likely to be high beta, high risk, high reward kind of stocks. So these are, I would like to characterize them as rockets. So if they fire, they will give us very good return and give a lot of alpha to our.
Ready to take off, rocket. That's what you mean. Okay. Got it, got it. Good to chat with you, Devarsh. Always, pleasure. Of course, we will be chatting more often. All the earnings that keep trickling in, we'll touch base with you for that. But would like to thank you for taking out time this morning and sharing your top three dhamakedar recommendations with us. Wishing you a very, very happy Diwali, a very happy festive season, and a very profitable Samvat 22 going forward.
Thank you for having me on the show, and I wish all the viewers and you the same. Have a prosperous new year. Thank you.
Moving on to Motilal Oswal, the brokerage gives us a festive, sweet twist. Swiggy, the anar of the market with profitability on the horizon. Axis Max Life, the safe and bright Fuljhari, powered by Axis Bank's distribution. Indian Hotels, the Kaju Katli of hospitality, boosted by domestic travel and MICE events. And a bonus pick from Motilal was LG Electronics India, the atom bomb of consumption. Welcome to the show, Siddharth. Lovely chatting with you. Wishing you a very happy Diwali and all your team members and teammates at Motilal Oswal. A very happy Diwali as well. But looking at the year gone by, there has hardly been any fireworks. We've been extremely flat. We've underperformed. There have been fair bit of turbulence in terms of the global landscape. Trump tariffs, earnings of course have been muted. FIIs have been net sellers, a big amount being withdrawn from the Indian markets. But then towards the latter half, we did see some bit of normalcy kick in. Good news in terms of tax cuts, GST cuts, fiscal measures, RBI rate cuts. So there's a balance of bad news and good news. But in Samvat 2082, what are your expectations? Do you see some of the fireworks returning, given the fact that we've already underperformed so much vis-a-vis global peers? Is India a catch-up trade, and could we retest all-time highs in Samvat 2082?
Thank you so much, Nandita. Good morning, and wishing you entire team of Moneycontrol a happy Diwali and a profitable Samvat ahead. All the viewers may have a great profitable year. So I think yes, last year we were thinking that the momentum in the market should continue. The lot of the domestic factors that continue to be in the positive, while you would see that there are several global headwinds which impacted or derailed the kind of growth that our economy was looking at. The first is obviously the US tariff, which kind of impacted not only the sentiment but also has the potential to slow the growth in exports going forward. So any resolution there would be a key catalyst going forward. Earnings after 3-4 years of strong double-digit earnings growth, corporate earnings showed some slowback and grew only about 5 to 6%. We expect after 3 or 4 quarters of slower growth, second half of FY26 earnings recovery to start picking up. There are several factors which should drive the corporate earnings. First of which is the interest rates. Cost of capital coming down drastically since the start of the year. RBI has cut the repo rate by 100 basis points. We are expecting another 50 basis points rate cut over the next few months. So December onwards, we expect RBI to resume its rate cut cycle again. CRR has been cut by 150 basis points. Enough liquidity injection has been done. After that, we had the government in the budget giving the tax benefit to income taxpayers. We had a good monsoon. Inflation has been low. Crude oil prices has relatively remained stable, leading to a stable inflationary environment. And to top it all, we had the GST 2.0 cut, which impacts the entire nation in that sense that while the income tax only touches about 3 to 4% of the public, the indirect tax is something that we all pay, and essential items, goods have been brought down. So I think that should lead to a big boost in the domestic consumption. So and we also have the festive season where we have seen the numbers for a lot of consumer companies reporting strong recovery in volume growth. So all in all, we expect second half to see a good recovery. FY27, which is bulk of your Samvat 82, should see the earnings growth going back to the double digit, about 14% growth after this year. We are expecting about 7-8% of Nifty 50 earnings growth. So, and finally, the valuations. Nifty saw some correction in the initial part of last 1 year, then we saw recovery. So in this global environment, we saw resilience from the Indian markets. Yes, we underperformed globally, but do mark that previous 3 years we sharply outperformed. So I think there is some kind of resilience that Indian markets have shown. Valuations have come down on back of time correction, and we do expect about 15-20% returns in the next somewhat from here on.
All right, 15-20% double-digit returns from in the next summer. That's what you can expect. But let's break it down to individual stocks then, since this show is all about the top three investment ideas for the new Samvat. Take us through the very first one. Which one have you shortlisted?
So yes, so coming to the stocks, the first stock for Diwali pick is Swiggy. We have a 1 year target price of 550, which is almost 25% upside from current levels. We believe that the overall competition in the quick commerce space is easing out, and that should help Swiggy with a slower dark store expansion. The discounting intensity has come down, and there is a lot of focus now on profitable growth going forward. So the entire quick commerce space should do well, where we believe that Swiggy should see a faster profitability in its Instamart, which is its quick commerce business. The food delivery business is something that is set to accelerate. We have seen that they have been so the key differentiating factor for Swiggy has been the innovation that they have been doing on its platform. They were the first to introduce the platform fee. They experimented with the quick food delivery, the Bolt, that is a 10-minute food delivery thing, some of that. And I think with the festive season, the demand improving, that should also help in improving the overall business. If I come to the numbers, the Instamart average order value has seen significant growth. The gap with Blinkit has narrowed. Their expansion in the 1,000+ dark stores, that is now focusing on utilization, improving profitability. So we are expecting the quick commerce segment, the break even, to happen by the third quarter of FY26, and that should be a big factor driving the stock price as well. So overall valuations look comfortable at a discount to the market leader, which is your Eternal with its Zomato and Blinkit business, and with the key matrices, operating matrices gap reducing with the market leader, we believe that the valuation gap should also narrow down. Hence, we believe that this year Swiggy should do much better in terms of the overall business, and hence we recommend a buy on Swiggy with a target price of 550.
Sure, buy on Swiggy with a target price of 550. Would it be your recommendation for just this year, or would you even look at the stock with a longer term 3 to 5 year horizon?
Yes, definitely. We think that the quick commerce business is a structural multi-year story, and with the innovation that they are doing, with the network penetration that they have done, I think there is a lot of scope for further expansion into some of the tier one towns, into some of the tier two, tier three towns where they are just penetrating. I think this is a good business model, and a slower growth should only lead to better profitability, better cash flows, and I think valuation catch up would only happen. So I think over the next 2 3 years, we could see a multi-bagger kind of a consistent growth kind of a story from the quick commerce space where Swiggy could continue to reward shareholders.
All right, the next 2 to 3 years looking strong, set for delectable gains. That's Swiggy for you. But tell you what, Sid, let's make this conversation a bit more interesting. So after every stock, I will pose 3 rapid-fire questions to you, and I would expect a one-line or two-line answer from you. Let's not make it too big. Snippets of your thoughts on this particular stock. So since you are outlining 3 Pataka stocks for us, or the Makedar stocks for us, the first question in this rapid fire is, if Swiggy were really a firecracker, which one would it be and why?
So I think what comes to my mind is the anar or the fountain that we light up in Diwali, because it spreads the light across. We see that that happening with Swiggy, the numbers to improve, the business growth across segments to happen, and the profitability to grow from here.
All right, spreading light this Diwali. That's Swiggy. The next one, what is that one ingredient that's spicing up Swiggy's growth? Would it be food delivery or would it be the quick commerce end?
So I think it's the quick commerce business. If I were to add, it's the tadka, the mirchi that we add on the tadka. I think that is what is Swiggy doing it with its innovation, and quick commerce will add the spice up to the overall numbers.
All right, tadka, that's how, of course, it's differentiating itself from the competitors. But why Swiggy over Eternal?
So I think Eternal, the market cap, if you look at, is more than 3 lakh crore. Swiggy, as we said, is just at 1 lakh crore market cap and is catching up fast. I think there is a big valuation gap, and the innovation that they are bringing to the table. I think some of these new age digital companies, that is what differentiates them. That they don't fear to innovate, they don't fear to experiment. Some of these things may not work, but nonetheless, that is what differentiates them. So I think all those factors makes us much more positive on Swiggy. But a word of disclaimer: we are also positive on Eternal to that extent. As I said, we are very bullish on this entire quick commerce space. But yes, the preferred pick today would be a Swiggy over Eternal.
All right, Swiggy over Eternal, that's a spicy story, and that's what Sid is betting on. That's the first Pataka or Dhamakedar stock from Siddharth. But Siddharth, what is the next one? Which is that other Pataka stock that you're betting on for Samvat 2082?
So the next one is Max Financial, the insurance business, which is now been renamed as Axis Max Life. I think the valuations are pretty comfortable compared to some of the peers at 2.2 times FY27 EV, which is your embedded value, and some of the key drivers that we believe are the above industry growth, favorable product mix, margin expansion, and a structural catalyst where the reverse merger of the insurance company with the parent, which is the Max Life, into Max Financial. I think that will remove a lot of discounting that is happening. If you look at the growth in Q1, the APE growth was about 15%, VNB growth was 32%, while the industry grew at about 5 to 13%. So much higher growth compared to industry. The growth engines in bank assurance, Axis Bank is providing that growth engine from the bank assurance kind of model where the distribution is taking place. In their own, they are setting up a lot of growth in the agency model, so they are not letting that down. Consistently, agent additions are being done, and that is the second growth engine alongside the bank assurance. Margins have seen significant improvement. VNB margins in Q1 were about 20 odd percent, which is an improvement of 260 basis points, which is fastest among its peers. For FY26, the management has given a VNB margins of about 24 to 25%, which is a sharp improvement going forward. This is supported by a change in the product mix to the non-participating as well as the protection plans, new product launches, and rising penetration of some of the riders in insurance issuance. So that should lead to improvement in margins. And the final is the structural catalyst, which I was talking about, the proposed reverse merger of Max Life into Max Financial. This simplifies the corporate structure, would unlock the operating as well as capital synergies, and could drive a valuation re-rating. Hence, we believe that Max Life could do well in the next summer. We have a buy rating on Max Life with a target price of 2,000, giving an upside potential of 24% from current levels.
All right, that's the target on at Max Life. A second, the market hour stock from Siddharth. But Siddharth, I just want to, play devil here. After the recent GST changes, there's been a whole talk of how input tax credit will go, and that would impact insurers. Do you see that playing out in some way? What are your thoughts there?
So yes, Nandita, I think we have had that discussion a lot, both internally as well as with some of these management and corporates. So I think if you look at the math, still works in favor of the consumer or the buyers of insurance. We used to pay 18% GST. Now with the entire GST going away, I think there could be an input credit benefit of about 5 to 6% that they will have to forego. And hence, we believe that still, even if these companies were to increase the prices, the base prices, because of the non-benefit of the input credit, I think we'll still have a 10 to 12% reduction in the overall outgo as a consumer, which should lead to higher growth. I think they will take 1 or 2 more quarters to understand these implications, because these are something which the accounts team will work out, and the newer pricing will come. But nonetheless, a 10 to 12% benefit passing on to the consumer is something that we are envisaging, and that should lead to a higher growth adoption for insurance.
All right. Of course, that would also get ironed out in due course. That's the call. And Axis Max Life, that's the second Pataka pick. But now let's come to our rapid fire on Max Life as well. Which Diwali Pataka would it be?
It's a full day that I believe everybody, it's safe for everybody. It brighten ups, lighten ups, and makes us smile, and used by everybody. So I think that's the best Fataka I can think of for Max Life.
Right, full jhari, of course, any age group, any, it's the most basic and, a necessity, so to say, when you are celebrating Diwali. So I think that's a good choice. But in terms of one big growth driver for Max, the biggest one, which one would it be? What is it?
I think two factors. A, the acquisition or the by Axis Bank, that is driving the growth through the bank assurance channel, which some of the other peers like an HDFC or an SBI were benefiting from, which is now coming to Max Life. I think that's a big growth driver going forward.
All right, got your point. Last one, what's the one song or catchphrase that describes Max Life the best?
So one phrase I think that comes to my mind is "Picture abhi baki hai mere dost." I think there is a lot more to show from the Max Financial that can come going forward.
All right, picture abhi baki hai aur hum bhi dekhne ke liye utavle hain. But the last pick then, this one I think is from the hospitality space, Sid?
Yes. So the last pick is Indian Hotels. I think in the last few years, Indian hospitality as a space has done really well. Demand has far outpaced supply, so there has been a consolidation in the industry. I think post-COVID, one big change we have seen in Indian demography is that people have started traveling a lot more. So if you look at before pre-COVID, Indian Hotels, which is the premium most brand in India, market leader in India, used to heavily rely on foreign tourists, but no longer is the case today. A lot of their business growth is driven by the domestic traveler, the MIC, which is your corporate events, social events, marriages happening. That is driving a lot of growth. We expect double-digit revenue growth for Indian hotels in FY26. As I said, demand supply dynamics is in favor. There is a lot of cultural, spiritual tourism that is also happening, and to its benefit, I think in hotels, a lot of these hotel companies in India, they have expanded using the asset light model, which is your management contract model, which gives them the flexibility to scale up the business fast. It is and not putting a lot of pressure on the balance sheet. I think that is something that they have done very well. The branding that they have done across different segments, the premium segment, which is Taj, then you have some of the other brands that they have created, that gives out a clear message in terms of what to expect. So in the medium to long term, what we're expecting, a strong room addition pipeline that is driving growth, both in terms of owned rooms of about 3,700, management rooms of about 16,400 rooms that will be added over the next few years. Favorable demand supply dynamics, increasing MIC activities in India, and hence we expect almost an 18-20% revenue and PAT growth over the next few years. So a consistent compounding company that we believe market leader in that sense. And the stock has also kind of consolidated in the recent past, which gives us a good entry opportunity. So hence we recommend a buy on Indian hotels with a target price of 880, giving an upside potential of 22% from current levels.
So you're comfortable when it comes to the valuations, given the fact that it has seen, some bit of correction in recent times. Is that what you're saying?
Yes. So if you look at, I think the stock price had gone up sharply, and yeah.
Go ahead, Sid. Go ahead.
So I was saying that stock price has kind of consolidated, which kind of gives the comfort in terms of valuation, in terms of EV EBITDA, currently trading at 25 times. I think on its peak, it was trading at about 30, 32 times on an EV EBITDA basis. And with the kind of growth pipeline that we are seeing, the consolidation in the industry, I think the valuation definitely looks pretty attractive at this point. And hence we believe that easily the company could deliver about 20% growth in terms of financials and about 22% returns for shareholders.
All right, expect 22% returns of from Indian hotels going forward. But if I were to ask you to equate Indian hotels with a Diwali sweet, anything that comes to your mind?
So my favorite Diwali sweet is the Kaju Katli. I think that is something that everybody likes. So this is a place where everybody would like to go spend quality time with their friends, with their family. So I think that's the best that comes to my mind, Kaju Katli for Indian hotels.
All right, load up on the calories, Kaju Katli. Also, one thing, according to you, that works best for Indian hotels and that makes it stand out as well in the sector.
Yeah. So I think the management focus, that is something that is differentiating Indian hotels to the industry, is that they're very focused on the customer experience, on the delivery, and last few years, the focus on a profitable asset-light growth. As I said, about 3,700 to about 4,000 rooms would be added on an owned property basis, compared to more than 16,000 rooms that will be added on a management contract basis. So that definitely adds to the overall.
That Hamas must disarmed.
So that is the kind of improvement in return ratios that they will bring to the table. So I think that focus on profitable growth is something that we like about Indian hotels.
All right. And any downside risks that you see going forward? Anything that could work against it?
So I think especially if you look at the hospitality space, any disruption, geopolitical issues, any of such kind of activities which can disrupt travel, tourism, that is a big risk to this entire industry.
Okay. any kind of disruption. Of course, that would hurt the travel industry. But of course, you've highlighted three dhamakedar Diwali stocks: Swiggy, Axis Max Life, and Indian Hotels. More, as they say. We can't not talk about LG Electronics. That's, I think, if you talk about Diwali patakas, I would call it an atom bomb, the kind of listing it had. Several brokerages have come out with notes on how it's a buy, and they've charted out target price of 1800 and upwards. At Motilal Oswal, what's the view? Of course, it was attractively priced, valuation-wise. It provided a lot of room. We had a lot of discussions around it before it listed. But post the 50% premium listing, what is your view? Has it changed? And would you suggest a buy on an LG Electronics as well?
So I think, Nandita, we also were among the few who released a report, buy report on the listing day on LG Electronics. We currently have a target price of 1800. So definitely we see more room for upside. What works in favor of LG is the strong industry tailwinds, home appliances, consumer electronics, consistently growing in India with the GST 2.0 rate cut. I think that is only adding to the overall growth drivers. LG holds category leaderships across segments, be it AC, fridge, washing machine, TV. So the LED TV, they are market leaders in India. The focus of the management of the company has been premiumization over the last few years. So premium products, both in the OLED segments, in the smart appliances, that is helping them climb the value chain. There is a lot of focus on localization. So domestic sourcing has increased from about 54% to 63%. That is helping them to expand margins. They are also now looking at exports out of India, so about targeting about 10% exports. I think that will be another growth driver. B2B segment is something that they are now focusing on. Again, 15 odd percent should come from there. That should drive growth going forward. And they are also focusing on the AMC business, the annual maintenance contract. So that should also lift revenue growth going forward. Finally, financials, pretty strong in terms of ROE, about 30%, return on invested capital, about 66%, strong cash flows. And finally, the valuations, even at current prices, I think they are about 36, 37 times on a price PE basis on a 1 year forward basis compared to the industry, which is trading at a 45, 50 times. So we see about another 15-20% upside from current odd levels. Any dip in the stock price to about 1500 odd levels, 1400, 1500 odd levels should be taken as a good entry opportunity to LG Electronics from a long-term perspective.
All right, true pataka in all sense. The kind of listing that it had, dazzled the street and dazzled, investors at large. But before I let you go, Sid, what would be the overarching theme for Samvat 2082? Would it be consumption, or would it be a mix of consumption and manufacturing?
So I think that's a very good question. I think next 1 year, the overarching theme in market should be looked purely from a domestic perspective. So when we say domestic, it definitely covers the consumption theme, but also a lot of manufacturing theme. So I think both should do well. Within consumption, you have the broader consumption theme, the durables, the automobiles, travel, tourism, healthcare. I think that theme should play out. And within manufacturing also, what we are seeing is electronic manufacturing, that is the EMS space, defense, railways. I think those themes should also play out. So post the festive season, the focus will shift to the budget next year. And with the government talking about a lot more reforms now coming in, I think there could be labor reforms up there, which could drive manufacturing as well in the quarters to come by. So I think domestic theme should be something that should be watched out for in Samvat 82.
All right, that's the thought then. That's the overarching theme for Samvat 2082. With that, Siddharth, would like to thank you for taking out time and joining in. Pleasure chatting with you as always. And here's wishing you, your entire team, your family, a very, very happy Diwali, very prosperous and profitable Samvat 2082 as well. Thanks a lot for joining in.
Thank you. Thank you. Wishing you all at Moneycontrol and all the viewers of Moneycontrol happy and profitable Samvat 2082.
Moving on to Anand Rathi, it sees mid-caps leading the fireworks. Their Diwali picks include BSC, the capital market firecracker, riding IPO momentum and the derivatives growth going forward. Fiem Industries, shining in auto and ancillaries and EV lighting solutions. BlackBuck, a digital logistics platform unlocking growth through tech adoption. Now, the Nifty has gained around 6% so far this year, but returns since last Diwali have been modest at best. However, factors like GST rate cuts, favorable growth inflation dynamics, strong festive demand are once again driving optimism. There's also anticipation of a comeback by the foreign investors to the Indian stock market after being big net sellers this year. Now, experts believe that if a trade deal between India and the US is finalized this fall, the Indian stock market could deliver healthy returns in Samvat 2082. To share some of the hottest stock recommendations this festive season, we are now joined by Narendra Solanki, who is the head of fundamental research, investment services, Anand Rathi shares and stock brokers. Well, Narendra, welcome to our show on Money Control. First of all, wishing you and everyone at Anand Rathi a very, very happy Diwali. You guys have put together a list of hot investment ideas for Samvat 2082, and I want your best 3 stock ideas for our viewers on this edition of Dhamakedar Diwali stocks. Take us through your first Dhamakedar stock. I believe it's a capital market play.
Yeah, good morning and wish you happy Diwali to you and your viewers as well. Yeah, definitely. We have selected a mix of large cap and mid cap stocks, and the first stock from us is capital market stock, which is BSC Limited. And if you see the performance, so there's no doubt that the company has been growing it's been more than 50%, and the derivative segment has also been one of the key contributors to its growth. And recently, we have saw some news coming in regarding weekly expiry. So SEBI has turned more lenient in terms of looking at weekly expiry in a more flexible way. So that has been one of the key factors which had been acting as a headwind for the stock, and that is now seems to be moving away for the exchange. So we assume that the derivatives would again start to show growth from next quarter onwards. And in terms of capital raising platform based fees income, you can clearly see the kind of IPO market we are having right now, the kind of rebound in the second half of this financial year we have been seeing both in terms of main board as well as SME space. And BSE has been a leading exchange in terms of SME platform. It has already achieved more than 600 SME listings. So the primary market capital raising has been really robust for the exchange this year, especially in the second half. So combining all these 2-3 factors, so we think that the good performance and good show for the company would continue for next at least 2 to 3 years. So you can definitely buy it for a long-term perspective. Right now, we have 2800 as the target.
We're talking about BSE as a stock. It has rallied somewhere around 50% in the last 1 year. Of course, over a 5-year period, it has given multi-fold, multi-bagger returns. Where are you in terms of valuations here? And of course, you mentioned that there was a regulatory overhang as well, and that's moving in the right direction. But could regulatory, overhang cloud performance going forward, or is that already priced in?
I think it's largely priced in, and being active in a regulatory kind of a setup. So there's always an expectation of some kind of regulation actions coming in, especially when the markets are at its extreme. So either the markets are too exuberant or either the markets are too negative. So in those extremes, there might be some kind of a regulatory support or actions which might be coming because it is operating in a key area. But having said that, I think the regulator, if you see the historical actions as well as the commentaries of the regulator, so it has been more supportive and it has been trying to strengthen the market both in terms of participation as well as bringing depth in the market. So it is all the more positive for the good health of the market. So I don't see any structurally negative for the company as well as far as regulations are concerned.
All right, that's the first recommendation then. BSC, regulatory overhang, already priced in, things are moving in the right direction, and of course take note of the target that's also mentioned by Narendra. But Narendra, what about the second recommendation, or your second bet? Is it from the auto ancillary basket?
Yes, definitely. Auto segment is one space where we are very much positive on, especially after the announcement of GST rate cuts and the kind of data we have seen in terms of sales numbers for the Navratri. We are very optimistic about both automobile stocks as well as auto ancillaries, which are acting as a key backbone suppliers for all these auto companies. So, in this space, we have brought out Fiem Industries Limited. It is into manufacturing of lighting solutions for the auto companies, both two-wheelers, three-wheelers, and passenger vehicles. Gradually, it has been increasing, trying to increase its content per vehicle in lighting solutions. It has also added to its portfolio LED lighting solutions, and we are hopeful of this content per vehicle as well as LED lighting solutions to add more share in its revenue going ahead. And in terms of capex, the company has already undergoing a capex of around 75 to 100 crores in its new plant, which is SMT line, a part of its 200 already announced crore capex. So we expect that this capex to come online in next financial year, and then we can see its revenue profile improving from there onwards. So you can also have a medium to long term positive view on this stock. Right now, we have target of 2,450.
But how transformative could the passenger vehicle orders be in reducing its two-wheeler dependence over the next couple of years? And how does this stock stack up versus its other listed peers?
See, in terms of valuations, if you talk, so it is very attractively valued at FY27 earnings. I think it is valued at around 16.57, 17 times earnings, which is decent for for the kind of the size this company has in terms of revenue as well as market cap. And yeah, the shift would be gradual. We currently see that the content per vehicle should improve by 3 to 4 thousand rupees in next 1 year. So it would be slow and steady. And as and when the new capacity comes up, I think the operational leverage that company would be getting in terms of improvement in margins, and so that would be significant. So yeah, going ahead in 2 year down the line, we see good improvement and shift from two-wheeler to passenger vehicles as well.
All right, that's the view then. Coming to your third and last recommendation, of course, GST cuts would also benefit the logistics sector as well. I was just going through your recommendations. I think BlackBuck or Zinka Logistics erstwhile is one of your recommendations. Take us through your targets and rationale here, and also the fact that the stock has already seen, in fact, it has doubled in the last 1 year. So, given that, would you still be comfortable with its valuations?
Yes, see, this is a space which, again, we are very positive on. And if you see the business model of this company, it is focusing on India's growing sector, which is the logistics sector, and it is acting as a solution, technology-driven solution provider to the logistics sectors. And it offers a platform to the various logistic companies, be it organized or unorganized sectors, especially in the trucking industry, and is a kind of a niche player. The model is also very asset light, so there's a lot of operating leverage play which is going to happen as and when the number of users increase, because largely the fixed cost in these kind of models remains the same, and when your user addition surpasses a certain threshold, all your revenue tends to move. Gets converted into your operating profits and then subsequently into the profit after tax. So we currently see the user additions to pick up pace as we see the digitizations taking effect. In fact, the company also offers fast tolling solutions. So as we have been seeing that the government is also moving ahead with a lot of technology implementation in the tolling systems. So again, this would also add to the business model of the company, and this would also add attraction to the to the number of higher user additions for the company as well. Also, the company is constantly looking at unlocking value through different digital innovation in the Indian trucking market. So not only it provides logistic solutions, but it also provides tracking, tolling solutions, fast-tech solutions. So a lot of value addition the company is doing on a timely basis. So definitely, yeah, we are very much positive on the stock with the long term. Plus, on the valuation front, if you see, right now it could seem like on a trailing basis, it could be seen as a highly valued. But yeah, if you see the kind of growth runway the company has in its future, and plus, like I said, this fixed cost kind of a model where asset light model, the incremental revenue, the larger share passes to the profitability. So that gives more runway in order to company to add more earnings for the investors. So in this kind of a model, the opportunity for higher growth remains very much there in medium to long term. So right now we have a target of around 860 rupees with this stock.
All right, that's an over 25% upside from current levels. So those were the three stocks, three best stocks coming in from Anand Rathi Share and Stock Brokers. It was BSC, it was Fiem Industries, and it was BlackBuck. But tell us, in terms of a tilt for Samvat 2082, people who are looking to reorganize their portfolios, should the tilt be more towards mid caps or should it be more towards large caps? At Anand Rathi, what would the suggestion be?
Yeah, see, I think we should have a balanced approach. Yeah, definitely a larger share of your portfolio should be in mid cap and large caps. Right now, we are more positive on on the stocks which are nearly transferring from small caps to mid caps. So not exactly the categories which are sitting at a place where they are in between mid cap and large cap. So we are more focused on stocks between small cap and mid cap category, because you have a huge growth runway for these kind of stocks. The base is low, the operating leverage kicking in for these kind of businesses is very high. The order books are very high, and if the execution picks up, so these stocks offer a large growth opportunity for investors as well. Coming to the large cap, we do not see anything negative happening, but because the base is very high for most of those kind of stocks, the growth would be moderately. Although it should be picking up from here onwards, but in terms of the percentage growth or the overall earnings growth, we see that the small cap and mid cap offer much better opportunity in comparison with the large caps.
Okay, mid caps offer better opportunities. But in terms of themes, particular themes, what are the top three themes that you guys are looking at?
Yeah. So our basic theme, the macro structure has been consistent. We are looking at companies and businesses which are more dependent on the domestic market front, and within these macro theme, the sectors which we are very positive are autos and auto inquiries first. Second, in healthcare, we are positive on hospitals as a sector. And the third, which includes our electronic manufacturing services, which includes our durables, consumer electronic plays, and which also includes our defense plays. So there are a lot of there are companies which are operating in these spaces. So this is our third space where we are positive for medium to long term.
All right. And what about food delivery companies like Eternal, Zomato, Eternal, Swiggy, etc. High growth names. Would you be looking at that as well?
Yeah, definitely. We have been recommending these stocks to our clients already, and they have shown good performance so far. So we still continue to remain positive on the stock, and right now our approach is that since the run-up is the catch-up play has already happened, so we are just waiting for the further results, and then we would assess again our situation, and then we will decide. But yeah, overall, we are positive on this segment as well.
All right, that's the view. Top sectors, top stocks, to add sparkle to your portfolio. With that, would like to thank you, Narendra, for taking out time and joining in. Here's wishing all of you at Anand Rathi Share and Stockbrokers a very, very happy Diwali from the entire Money Control team. Thanks a lot for taking out time and joining. Moving on to Asit C. Mehta, which offers a festive thali of strength, spice and colour. JK Lakshmi Cement, a solid performer with strong capacity expansion. Bikaji Foods, twisty but delightful, capturing rising consumption in Tier 2 and Tier 3 markets. Kansai Nerolac, ready to add vibrant colour to your portfolio. Over the last few years, investors have been getting used to 20 to 25% returns from the market, but Samvat 2081 turned out to be a reality check of sorts, right? Because portfolios barely saw any returns, but here on, are we back to normal, or can we get back to those supernormal gains of 20 to 25%? What would be a reasonable return expectation from the new Samvat? Let's bring on board our guest then, Siddharth Bhamre, Institutional Research Head, Asit C. Mehta Investment Intermediates, joining in to answer that question and of course to share three dhamakedar Diwali stocks for our viewers. Sid, lovely chatting with you as always. As I was mentioning, last 3-4 years we had gotten used to supernormal 20-25% kind of returns, and that was being looked upon as normal. But now, of course, we had a reality check. The Nifty's barely moved in the last 1 year. Going forward, what is a reasonable return expectation from Samvat 2082?
Morning, Nandita, and thanks for having me on your show. It's always a pleasure to interact with you. And onset of festive season starting, I want to wish you and your audience and viewers very very happy Diwali, and may God bless us all with good health and wealth. Yeah, it is a wake up call for people who feel that stock market goes only in one direction. But the best thing, what has happened, that despite higher valuation, Nandita, the stock market has not corrected significantly. And this is what typically is called a time-wise correction. But the best part in this market, if you see, even though, last 1 year markets have not gone anywhere, we have seen a lot of sector-specific, stock-specific action. And this is a fabulous time for money managers to show that what they're made up of. When index doesn't go, but still your portfolio does well. This is the time when men are separated from boys. And I still feel that for next 1 year, we may not see very significant upside from the headline index per se, but there are ample amount of opportunities in all segments, be it large cap, mid cap or small cap, where decent amount of money can be made. Only thing is, because you're not in a bull market, you have to reduce your expectations. When interest rates on FDs are around 6.5%, equity, if it gives you 15% return, I think you should take it with both hands.
Sure, got your point. Of course, as you mentioned, there have been quite a few movers, individual movers, right, over the last 1 year, even though we haven't got, great returns on an index level. So where are you spotting more alpha generating opportunities now? In the mid cap space, or would you, hunt for it in the large cap universe?
See, it depends totally what's your objective. We are finding a lot of potential upside in smaller and mid cap space, but not as a basket. Say maybe out of 100 stocks, there might be 5 stocks where we are seeing decent upside, maybe in plus 20% range, and those kind of stocks which we would probably discuss today. But from a fund management perspective, from a portfolio management perspective, and I'm not talking about professionals, I'm talking about individual portfolios, you need to have a balance. There's a lot of money which has gone into mid cap and small cap funds. And, market is testing patience of all these SIP investors. Yes, we talk about, invest from 5 years, 10 years perspective, but when you don't see returns since the last 1.5, 2 years in your funds, whereas FD has given certain returns, there might be an herd mentality, which may not be right, but it happens. You might see, some correction in market, which would lead substantial correction in some of the mid cap. So for me, it would be blend of all. Large cap, mid cap, small cap opportunities are there everywhere. but not in plenty. You have to be very careful. You have to be very picky in this kind of market. I'm expecting one more year of consolidation in this market. I'll be very happy if markets are, probably, plus minus 5% here and there. But yeah, stock specifically, we should interact more.
Sure. Okay. One should remain stock specific, and of course, you are expecting another year of consolidation. But any thumb rule while selecting stocks before we come to your Pataka picks? Let's talk about a thumb rule that investors should follow in the new Samvat while picking stocks.
Uh, you know, Growth investment is something which everybody is talking about, and rightly so, because many a times we have seen that value stocks remain value stocks for prolonged period of time. They remain attractive. So you should obviously chase growth, but growth at certain cost. We are seeing some of the mid caps getting valued, 60 times, 70 times. And I'm not talking about brands. I'm not talking about consumption stocks. I'm talking about, some of the IT stocks, some of the manufacturing spaces, pharma spaces, where because there is 15%, stocks got valued at 45, 50 times forward earnings for an earnings growth of 20, 25%. They were still getting expensively valued. And that 20, 25% growth is gone. Now they are hardly growing at 10, 15%. So there has been some correction, but that correction can be deeper. I think investors, at least for next 1-2 years, should have, and there is no thumb rule as such, Nandita, which is going to be there for perpetuality. You have to adapt to the changing market situation. So look for the growth stocks, but don't go all out for a stock where valuations are expensive. So a lot of people see P/E ratio. I think there's one more ratio which is very important to value growth stock, which is price to earnings divided by growth, PEG ratio. If PEG ratio is substantially about 1.5, I think you're buying a very expensive stock, no matter how good that company is. So keep that also in mind, is what I would say.
Yeah, Sid, you mentioned PEG ratio, and since we are in the middle of festive season, I can only think about another PEG. But okay, let's not talk about that. Let's talk about your, recommendations then. The Dhamaka, stock picks for our viewers for the new Samvat. It's time for the big reveal. Let's start with the first stock, and I believe it's from the cement pack. Why do you feel that a cement stock could cement solid gains in your portfolio, and which stock is it from this universe?
So it's very surprising, when people ask for Diwali picks and somebody come out with a cement stock. But then there are very solid reason to talk about this stock, which is JK Lakshmi Cement. It's a small company. It's a hardly 10,500 crore market cap company. But then we are seeing the intent of management is quite aggressive. Generally, we are seeing capacity expansion. Now, cement, if you see, cement sector is going through consolidation, Nandita. A lot of big players are acquiring smaller players, and smaller players are getting re-rated. Smaller players are not doing too much of expansion. Yes, everybody's expanding, but look at the intent of JK Lakshmi Cement. They're expanding from current capacity, cement capacity of around 16.5 million tons to 30 million tons. That's almost double the capacity in next 3-4 years. That is still FY30. Right now, company is strongly present in North and Western and Northeast market. And we are seeing that high growth is coming from Northeast. The realization is also substantial. Generally, a mid-cap company or a small-cap company like JK Cement or the peer-to-peer comparison has realization of around, say, 4,900, 5,000 rupees per ton. JK Cement right now is having realization of 5,200, and we are expecting realization to improve. Obviously, most of these cement companies are also going through cost-cutting measures, going green. So there's a lot of captive power, green power, which JK Lakshmi Cement is going to have, and thereby reduce the cost, maybe around 60 or 80 rupees per ton in next 1-2 years. Also, there are other businesses, which is like RMC, Putty, AAC blocks, which are cement blocks, which makes construction faster. That segment is also doing well, though it doesn't have great margin. But then to be in the value chain, the company is getting aggressive there also. It currently constitutes around 9% of total business. It would probably in next 1 year go to 10%. Even from valuation perspective, large caps trade around 18 or say Shree Cements, Ultratex of the world trades around 18 to 21 EV/EBITDA times EV/EBITDA. Mid caps generally trade around 12, 13 times, and the bottom, that is small cap, trades between 9 to 12 times EV/EBITDA. Now, JK Lakshmi Cement, with aggressive intent, good earnings growth, good capacity expansion, are available at today 9 times EV/EBITDA. We are expecting, decent upside, around 25, 27% upside in stock from current levels. We are valuing company around, 10.5 times EV/EBITDA to FY27 earnings, and that's a great stock to be in right now from cement space.
All right, a great space to be from the cement space. But if I may play devil's advocate here, there are structural tailwinds for the sector, as you mentioned as well, post the GST cuts, but it remains inherently cyclical. There are times when demand moderates, especially during the monsoon season, and also the price hikes sometimes are unsustainable, right? So, what are the key downside risks, for a stock like JK Cement? Especially, in fact, for the entire cement pack, especially for the likes of JK Cement.
So obviously, the good amount of growth comes from two segments. One is housing and one is infrastructure. So if you see, a macro headwinds coming in and housing taking a beating or slowing down, obviously most of the cement companies would suffer on that. Also, what we are waiting right now is government capex to increase, and that would probably, give a fillip. If that doesn't come, then also cement companies may not see substantial hike in revenue or growth. There were some unfortunate nature-related events which have happened in North and Northeast, where JK Cement has good presence. So purely from JK Cement perspective, I think headwinds are less at this point of time. There's a lot of construction activity which is now going to happen in North as well as Western market, and they're also trying to foray into other markets. So I think with capacity expansion and the macro, I won't say tailwinds, but the way things have been panning out from infrastructure perspective, I think the risk attached to the investment is quite less, and purely from valuation perspective also it is pretty attractive. Stock has done well, it corrected in between, and I think the downside from current levels is quite less. So risk reward ratio is also pretty good to be in this space.
Okay, limited risks, and of course the risk reward ratio also looking fairly attractive. But let's move on to your next stock then. It's a snacking star, if I'm not mistaken. That's also been a big beneficiary of GST cuts, and the mention of pegs would be more appropriate here. Let's talk about that pick then. Sid, which one is it?
So Bikaji is one of our coverage in FMCG space, consumption space, and I strongly believe that the way things are panning out from macro perspective, we are going to see uptake in consumption. We are going to see spend increasing, and when there are small GST cuts, when interest rates are down, it will take time for people to take bigger liabilities. When I say bigger liabilities, I'm talking about bigger investments. So if today GST cut is there, or interest rate cuts are there, people are not going to go and rush to buy homes. People are not going to rush and buy vehicles or two-wheelers. But somewhere these small consumptions would increase. So we are expecting Bikaji to do pretty well. Bikaji is from the lineage of Haldiram's, and the main product of this company is bhujia. 35% of the sales happen from bhujia, 35% from ethnic snacks, and the other like sweet packages and all are also contributing substantially to the revenue. Company Nandita has done a lot of capacity expansion. Predominantly, it was only in Rajasthan. They are market leader in Rajasthan, Bihar, and Assam, and now they have identified some focus states like MP, UP, Maharashtra, where population is pretty high. They're also going, towards Chhattisgarh. They have made some decent grounds over there. Also trying to foray into southern markets. Right now, after its capacity expansion, it is just utilizing 45% of its capacity, and that's the reason some of the return ratios have come down for the company. But going forward, as we don't see any significant capex plans, we are expecting capacity utilization to improve from 45% to 70% in next 2 3 years, and also margins to improve substantially. Also, interesting point here is that these small ticket size snacks generally has lot of seasonality or impulsive nature of buying. If it's a 5 rupee pack, 10 rupee pack, but mind you, for Bikaji, 60% of its sales is coming from family packs, where company can easily absorb, pricing pressure and can do, change in grammage. And their margins are also substantially higher compared to the smaller packs. Taking all these factors into consideration, also some correction in valuation. It's not a cheap company by any means, but FMCG companies which do have brand values do command higher Ps. Bikaji at this point of time is trading somewhere around, the kind of levels which you're seeing, the kind of price to earnings ratio we are seeing. We see decent upside. It's not a multi-bagger, obviously, but certainly the statistics which we are seeing, the barometers which we are seeing from valuation perspective, it offers decent upside around 20-25%. Now, Nandita, you'll be wondering 20-25% in a small cap stock. We are in a market where, it's difficult to make returns. So we have to be realistic. You can't come and start talking about multi-baggers when markets are not giving you, that kind of opportunity. So even in a consolidating market, if you get a proper well-researched stock with good parameters, you can easily take these kind of returns. So Bikaji is one of our preferred picks from small cap segment.
All right, but you expect a 20 to 25% upside. Any risks to your upside target? For Bikaji, as you mentioned, it's not a cheap stock, but it does offer a 20-25% return potential. What could be the downside risks to your target?
See, there are two things which are very important in company like Bikaji. One is the quality of product. I don't think so we are going to see anything going down there. And second is how much you invest in distribution and what kind of returns or how much reach you get in those distributions. Sometimes, identifying a market and being too aggressive in terms of spending and that not going right, that can hit. I think consumption space is a less riskier space. There is more visibility in earnings, and that's the reason the cost in the sense I'm talking about the earning multiple commanded by such companies are very high. You look at, HUL, Britannia. I'm not comparing Bikaji with these companies. What I'm trying to say is wherever the earnings visibility is very high, the valuations are also higher, plus the brand value. So the downside risks are only from ad hoc spending management probably would end up doing to make quick inroads in new states, which looks very unlikely at this point of time. Management has shown a lot of, composure. Management has been pretty upbeat on how, in a measured way, they are getting into new states. And prime example of that how they have made inroads in state of Chhattisgarh and done pretty well over there. So that can be the reckless spending in ads and distribution. That can be the downside risk, but otherwise I don't see that happening.
All right, got your point. Sumptuous gains of 20-25% can be expected from a stock like Bikaji, and that's among the 3 dhamakedar stock recommendations from SID for Samvat 2082. But coming to the last one, that's also from the consumption space as well. Which one is it, and what's the rationale?
So we talk about Diwali and we won't have, paint companies that's, not done. So one stock from paint company and which I personally like because of how it has diversified its earning into 2 different segments is Kansai Nerolac. Now, Nandita, we all know that paint industry since last, or especially paint stocks since last 3 years have not gone anywhere. In fact, they are one of the largest underperformer. Then why we are giving this stock? Because sometimes there is a story and sometimes there is valuation. And now we are seeing that the negative story in paint industry is subsiding. We are seeing that competition has stabilized. We have seen that margins are bottoming out, and there has been pre-monsoon. There was visible uptick in demand. Of course, seasonality plays in, and rainy season which got prolonged. So Q2 may not be very significant for paint companies, but we are expecting high growth to take place on low base effect. Q3 and Q4 to be substantial. For Kansai, as I was mentioning, 45% of revenue comes from industrial segment. And I think day in and day out, we have been talking since last 3 months how auto stocks and auto industry is doing well. Kansai enjoys around 50 to 55% of market share. The paint which is done on cars and bikes, so that is called industrial paints. And Kansai has 50 to 55% market share of that. So if you are expecting good growth to happen in automotive space, or which has been happening, then Kansai is the natural beneficiary of it. We are also seeing, margins which are bottoming out to, move higher from current levels. Kansai historically has traded at very high P multiple. It is available at, the cheap 26, 27 times, 25 times, 1 year forward earnings. So here also, I feel that story was negative. Now, no story, or probably it would turn positive. Valuations are great. Everything is now going to turn towards upside, and valuations are pretty attractive. So great stock to be in, value stock, if not growth stock. So there were two growth stock which I gave you, which was JK Cement and Bikaji, but Kansai Nerolac seem to be more of a value stock. And not that there's no growth. The growth is going to start. You're going to see growth in next 2 quarters and over a period of 1 2 years as well.
Okay, that's about paint. And of course, there's this crude tailwind that is emerging as well. Crude prices have cooled off quite a bit. And as you mentioned, competition is also settling down within the space. But yes, two growth stocks and one value stock from SID, in the form of JK Lakshmi Cement, Bikaji, as well as Kansai Nerolac. But, those are all your recommendations. The Dhamakedar Diwali stocks from you, Sid. But I have put together a very short rapid fire round to really understand, why you have picked up these stocks and which one is your favorite. I'm sure you won't really name it blatantly. So I've put together this rapid fire which would help us understand which one of these is your favorite. Let's start with the first one then. If you had to describe Bikaji as a Diwali snack, which one would it be? Would it be the evergreen motichur laddu, or would it be a surprise jalebi? And why?
So can I change the option? I like Kaju Katli more than anything else. So that if you give me a choice, and if that's not choice, then jalebi. No specific reason because the question is as such. But yeah, out of two, I like jalebi more.
Okay, got your point. It will be a jalebi. Okay, so if these stocks, JK Lakshmi, Bikaji and Kansai, if they were part of a festive thali, which one would you serve first?
I want to make thali strong, so probably JK Lakshmi. And reasoning being, we are seeing good, earnings growth happening over there, and stock is in great momentum. So if near term, if I have to see, and from long term as well. So first thing first, JK Lakshmi Cement.
Okay, JK Lakshmi Cement, that would be served first in a festive thali. And which one of these stocks would you gift your investor friends for Diwali? And which one would you keep for yourself out of the three?
Well, as a compliance, I don't, put directly money into stocks, especially those stocks which we are covering. But nevertheless, to answer your question in a lighter way, and that's a disclosure, maybe I'll keep a value stock for myself and give a growth stock to friends.
Okay, I got the
gist. They want immediate returns. All friends want immediate returns, so yeah, they should chase growth.
But you are ready to be patient. So just for the benefit of our viewers, three stocks that we spoke about, two of them were growth stocks and one was value stock, right? Growth stocks were in the form of JK Lakshmi and Bikaji, and value stock was Kansai Nerolac. Just saying, I mean, of course, you have compliance issues, and I'm not like forcing you to answer this question in terms of which stock you want to be keeping for yourself. But last question, really, if your portfolio were a rangoli, which stock adds the brightest color?
I think it's a no-brainer. If you're talking about colors, then how can we miss out on the paint company? So Kansai Nerolac it would be.
All right, Kansai Nerolac. That would be. It was a fun, rapid fire round with you, Sid. With that, I would like to thank you for taking out time and joining in. Of course, wishing you, your family, and your entire team a very happy and prosperous Diwali. Of course, we are heading into Dhanteras. Wishing you a very happy Dhanteras as well. And in the coming Samvat, Samvat 2082, I hope you prosper and you have a profitable Samvat 2082. Health, wealth, peace, prosperity. Everything comes your way. Here's wishing you a very, very, very happy festive season.
Thank you so much, Nandita, and I'm always happy to be on your show. And whatever you said really, means a lot. And I wish happy Diwali and happy festive season to Moneycontrol team and its viewers. Thank you so much.
And lastly, Jujit Financial Services reminds us that diversification is key. Bharat Electronics, a defense powerhouse with a robust order book, is among its top ideas. Zomato, now eternal, led by Blinkit, making a strong comeback in quick commerce, is also on their top picks list. Lastly, they like Jio Financial Services, the Reliance BlackRock joint venture, creating long-term value. All right, let's bring on board the, Gaurang then. Gaurang, lovely chatting with you. Just about 5 sessions to go for the Muhurat session. Before I get into picks, I want to understand from you. Of course, Samvat 2081, as I mentioned, was a tough year for investors, largely flat returns despite some recovery in the second half. What's your overall outlook for the market in Samvat 2082? Could it finally be a bit brighter for portfolios and returns?
Thank you so much, Nandita, for having me on the show. Good morning to all the viewers of CNBC TV18 and Moneycontrol, to you, to the entire team. Let me first of all extend greetings of festivity this Diwali and of course the new Samvat. And may Lord Shankara, may Ma Durga, may Ma Lakshmi shower blessed of their blessings to all of y'all, and all of y'all stay healthy and hearty. So my view, Nandita, is that if not now by this Diwali, that is next week, then possibly by this year end, we are likely to see a new high on both Sensex and Nifty. And the reason for that primarily is going to be the long-awaited resolution between US and India. I think most probably by this month end or early next month, that is first, second week of November, you might have good news coming in from of a trade deal in place, which will be signed, sealed and delivered. And by that virtue of that, I think that additional 25% tariff that has been put on India by US would come down, and that from 50 to 25. So that's point number one. Point number two, we've already signed a EU FTA with 4 European countries. Work is in progress for signing with rest of the European countries, or the Eurozone as we call it. That will be again a good news. The earnings season which we are witnessing right now, my understanding is that we should see a little bit of pleasant color and shade, which will possibly give the tailwind for the markets to move up further. Lastly, but not the least, is the ever-changing government support in terms of policy changes, bringing in new policies and implementing them at ground level to boost consumption, to support growth, to support the GDP growth rate, and of course the overall ease of doing business. I think if I have to, and of course, that little bit of more tailwind positive from our good friends FIs who have been saying goodbye to us. But in the recent days, we have seen they, trickling back to the Indian equity market. Not that I'm too overly concerned about the FI flows coming in. I think domestic institutions are quite well placed to handle any kind of uncertainty. So my view is that if not by next week Diwali or Dhanteras or New Year, then possibly by this year end, we are going to be witnessing a new high on the markets.
All right, and that's music to the ears. New high, if not now, of course, in Samvat 2082, we can pencil that in. Before breaking it down to individual stocks, of course, we'll be talking about your three best bets for Samvat 2082. Post this GST reform and tax cuts announced, in the budget, we have the 8th pay commission as well, pretty soon. Should the portfolio construct be more on the consumption side, or it should be a 50-50 between consumption and manufacturing? What is your sense? Because as consumption increases, companies also look at expanding capacity, and that there's been much talk in the market that private capex is also set to return. So how should one position themselves in with a in an overall portfolio, consumption and manufacturing? What should the construct be? What should the divide be?
So, as a long-term investment philosophy, Nandita, focusing on one particular sector or leveraging more on one particular sector does not really augur well over a longer. I definitely agree with you that the changes in the GST, the Avatar, new GST Avatar 2.0 has given a tailwind for the consumption, whether it is discretionary or non-discretionary, on the positive side. But have a diversified portfolio always, so that you diversify your risk as well. So we are positive on non-discretionary spend like FMCG, on which you have to spend daily, you have to consume daily. So you have names like Tata Consumer, Godrej Consumer, HUL, ITC, Dabur, Marico, Britannia, Nestle. Then you have discretionary, so you can delay your spending in the future. So something like consumer durables, Blue Star, Voltas, Havels are some of the names that we are positive on, or something like an entry-level motorcycle or an entry-level car. Again, we are positive over there. The least distant discretion would be gems and jewelry, wherein we are positive on names like Titan Company. So my sense is, and of course, not only the GST, Nandita, what we are forgetting is that the Honorable Finance Minister, Srimati Nirmala Sitharamanji, gave a tax break to people who are earning 12.75 lakhs. We have good monsoon, semi-urban, rural demand is going to be a big positive for the top line numbers. And along with that, this new avatar of GST 2.0. So I have to put all this thing in perspective. I think from now on, that is October, November, December, you will see that green shoots of consumption at ground level. The momentum or the acceleration is going to be from next year.
Okay, got your point. But now let's break it down to individual stock names, then your top three bets. But let's start with the first one and the rationale. I think I was going through your bets. It's from the defense pack, if I'm not mistaken. Take us through your first bet and what is the rationale behind it?
So I think it's a company which has been a very silent performer, if I can use that word. Not many people noticed it, but now it's coming in the limelight. It's been in the spotlight. We've been covering Bharat Electronics Limited, BEL, for a pretty long period of time. I think in the last 3 to 6 months, the number of orders that this company has got is huge. Execution of this order book is going to translate into earnings, top line, and profitability. Improved flows from government as far as defense spending is concerned is also going to have a positive impact, not only on BEL, but for the entire defense sector. And I personally feel that the defense sector is going to be a story which you are going to ride for the next 3 to 5 years or maybe more, Nandita. Possibility of orders coming in from the overseas market is going to be another positive. And of course, we are reaching to that level, from being a net importer to being a net exporter for the next couple of years. So 480 is an approximate target that we have put aside for Bharat Electronics Limited, that is BEL.
Okay, 480 is the target. It's a silent performer, that's what he said. But in the last 5 years, I was just going through the chart. It has, of course, given multifold returns. It's a multi-bagger. So if I may ask, when you look at a stock like BEL, what's a Hindi movie song that comes to your mind, Gaurang? I would like you to, sing a line for us.
Well, so, I don't know whether you know about this song or not, because it's a pretty old song. It's dedicated to Bharat Mata.
Hmm.
It goes like this. Of course, I'm not a very good singer, so please pardon my vocal cords on this. But "Hey mere pyare watan, तुझ पे दिल कुर्बान, तू ही मेरी आरज़ू, तू ही मेरी आमना." This is the song that I would like to dedicate to BL, that is
Okay.
Bharat Electronics Limited.
We've all heard of that song. Sure. All right, so that's BEL. What about the second bet? Which stock are you betting on, for summer 2082?
Well, so that's going to be an appetizer, and that is Eternal, which is earlier known as Zomato, of course, as we all know, Nandita. It has been everyone's favorite, and I'm sure a large part of smartphone users would have an app of Eternal. I very well remember, Nandita, the IPO was at 76, if I'm not mistaken. Correct me if I'm wrong. Post listing, it went to 150 plus levels. Then
It was, yes.
came down crashing. It came down crashing. It went below the IPO price. I think it hit a low of 40, if I'm not mistaken. And from there on, the recovery started because of the recovery on earnings front. And today, it has been in the last 1 year, if I'm not mistaken, or 1.5 years, along with BL, Eternal, that is Zomato, is also one of the top performers. And this company is likely to do well, primarily because of the contribution that is coming from Blinkit. Mind you, Nandita, when they took over Blinkit, Street was of an opinion that they have paid a much higher price, and that was the concern, and that took the stock down to sub IPO price. This Blinkit has now started to contribute to a greater extent compared to the food delivery platform. There are new dark stores that are going to be opened up. At that run rate of new dark stores is very high. I think they will reach the highest level by December 25. And next year, that is by 2026, they want to add on to more. They are reaching out to newer geographies, newer cities, tier 2, tier 3 cities, wherein the market share is going to increase, the subscriber base is going to increase. And of course, the ever expanding appetite of Indians in terms of being a foodie will also keep the food delivery platform registers ringing high. So very conservative target again, somewhere close to about 420 approximately.
Okay, appetizing one, as you said, but a lot of experts have spoken to Gaurang. They've said that, of course, the world is of the view that we may be lagging behind when it comes to the AI race, but when it comes to consumer tech, hands down, India really takes the lead. That's, of course, according to the experts who have spoken to thus far. But I'm really curious to know what is the song that comes to your mind when you talk about Zomato, because all of these companies, when we were seeing a fair bit of correction in the market, these companies, the consumer tech companies, including the likes of Zomato, managed to give good returns. So I'm really curious to know what song comes to your mind when you think about a stock like Eternal.
So actually, I thought of this, but I could not get a song which will fit to Eternal. But let me say this. I'm sure all of us are familiar with this movie of Anil Kapoor, Mr. India. And in that, the kids in the orphanage, because there was no food, and suddenly the food comes in because Anil Kapoor was able to gather some money and the food. So there was this punchline, calendar khana lao. I think the kids went on crazy and then the food was made. So I would dedicate that dialogue of all those kids of calendar khana lao to Eternal.
It definitely got gains when the markets were correcting, right? So yes, I think it really fits well, this dialogue. But lastly, what is your third best bet for summer 2082, and what is the rationale behind it? If you can share it with us.
So undoubtedly, I think if we are talking about Diwali and Dhanteras, I think it would not be appropriate if I leave out NBFCs, Mahalakshmi's blessings. So Jio Financials, Nandita, is the last stock that I personally feel is going to do extremely well. And, changing dynamics in the financial sector will support growth. Regularity approvals that the company has been getting to start business, newer businesses, newer verticals will add to the overall product offering that the companies have. Got a very strong backing from the parent company in terms of adding it to the performance and any kind of financial support that it will need. So my sense is that it is, and my feeling is with this JV with BlackRock is going to augur extremely well because it's a very credible name, both Jio as well as that is Reliance and BlackRock. Both of them getting together into financial sector I think it's going to do wonders. So Jio Financials with an approximate target of very conservative 380.
All right, Jio Financial is the last, third top pick from Gaurang. But I just want to give our viewers a disclaimer. Jio Financial is part of Reliance Group, and so are we. Of course, if you want to invest in that stock, consult with your financial advisor before doing so. But of course, three stocks that Gaurang mentioned, his top bets: BEL, Eternal, and Jio Financial. So that could add, the much needed light to your portfolio for Samvat 2082. But on that note, Gaurang, would like to thank you for taking out time and joining in on our Diwali special, and of course sharing your recommendations with us. Wishing you and everyone at GeoGs, and of course to your family as well, a very, very happy Diwali and a prosperous new year. Of course, we will be connecting through the year, and we'll be talking about a lot of stocks and trends in the market as well. But here's wishing you a very, very profitable Samvat 2082 going forward. Thanks a lot for joining in, Gaurang.
Thank you, Nandita. Wishing you all the same. Pleasure being on the show.
So what's the key takeaways for investors? Across all brokerages, a few points stood out. Domestic consumption, financials, manufacturing and defense are likely to drive returns. Mid-caps and selective stock picks could outperform broader indices. Whether it's rockets, fulgeries, Kaju Katli or colourful comeback stories, Samvat 2082 promises a festival of opportunities for those who stay strategic. Here's wishing all our viewers a very happy Diwali, and here's to smart investing and bright returns in Samvat 2082.